China has extended its lead over the U.S. as the world's biggest auto market this year, with passenger vehicle sales soaring 47% in May. But Chinese automakers aren't only targeting the domestic market, they want a foothold overseas as well. And that's why a relatively unknown Chinese parts maker is bidding for General Motors' Hummer brand. Bloomberg's Stephen Engel reports now from Beijing.
It's an upstart few in the auto industry had ever even heard of. With a name seemingly as long as this stretch H2, 4-year-old Sichuan Tengzhong Heavy Industrial Machinery Company wants to jump to the big time with its bid for GM's Hummer unit.
A lot of people would have been less surprised if they woke up this morning and heard that Burger King had bought Hummer. And this is a company that has very little overseas experience, is not very large, has very little consumer branding experience. So I think this is a difficult deal to see work from an economic standpoint.
And possibly from a regulatory standpoint. China wants to consolidate its auto industry, which has more than 100 car makers. The government also wants to tighten fuel efficiency standards for green reasons.
Gas guzzlers definitely don't dominate the market here. Most customers prefer to buy smaller cars. Even though a Chinese company may buy Hummer and produce it in China, they will have a lot of work to do if they want to develop the brand well.
The owners of this car market here in Beijing claim they sell between 30 to 40 of these Hummers here in Beijing every single year. Now, the city doesn't seem too suited to the Hummer with all its stop-and-go traffic. They tell me most of the Hummers that are sold in China are sold to the newly rich coal miners in the western province of Shanxi.
The coal miners need it for the uneven roads. They use it as a tool instead of walking. Some well-off customers want to distinguish themselves from the majority.
And it's not just markets at home that interest Sichuan Tengzhong.
I think it's a great strategic fit, because in addition to their promising to keep American jobs in America, making Hummer in the U.S., I'm sure they can use a brand and then still use China's still relatively low labor costs to make Hummers in China for export from China to other parts of the world.
Sichuan Tengzhong isn't the first Chinese company eyeing assets from failed car makers. GM Saab and Opel, along with Ford's Volvo, all have attracted Chinese interest, and Britain's Rover is now owned by a Chinese firm. But in 2004, China's biggest domestic car maker, SAIC, took over South Korea's SsangYong Motor, which later filed for bankruptcy after SUV sales plunged. Authorities here are wary of going down the same road again when an economic recovery is still so uncertain. Stephen Engel, Bloomberg News, Beijing.